All right, as we enter the portion of the event where we focus on exits through both a panel, IPO Spotlight that we're about to do, and then a panel, I couldn't be more pleased to have one of the poster children of the 2011 IPO class here with us today, Jonathan Wolfson, who's the co-founder and CEO of Solazyme. Solazyme is one of the leading industrial biotech companies producing renewable oil and bioproducts from microalgae. Under his leadership, companies formed partnerships with Dow, Chevron, Unilever, the U.S. Navy, using its technologies to produce everything from skincare products to jet fuel. He was at the helm of the young company when it broke through the private markets and entered this IPO fray in 2011. He was recognized as a technology pioneer this year by the World Economic Forum. Prior to joining Solazyme, Jonathan had a successful career in finance, business, and the law. He was VP of Finance and BD at 7th Online. He worked as an investment banker at Morgan Stanley. And like many who've been on the stage over the past 2 days, he represents this notion of talented pool of people, influx into clean tech. Join me in welcoming Jonathan Wolfson from Solazyme.
So let's see, okay. So I wanted to thank you for giving me a chance to get up here today, and wanted to apologize for my tardiness as well. Ira's a master tactician and ended up making it look like everything was as smooth as could be, but I got off a plane about 15 minutes ago, so pardon the slightly hoarse voice. I would have been down here last night, except I have my first child on the way, and I made a commitment to my wife that I would not spend any overnights anywhere for a period of time, and we're right in that no overnights anywhere period of time right now. So I'm going to talk a little bit about Solazyme, and Ira directed me very carefully. You can talk about your company, but what people want to hear is they want to hear about the IPO experience, the IPO process. So I tried to weave the two of those things together, and we'll see how it turns out. Let's see. Okay. I'm going to talk a bit about the requirements that I viewed and the lens that our team viewed to actually even take the company public. In order to get the company through a successful IPO process, we needed to mitigate some very, very key risks: technology risk, market risk, capital and financial risk, and execution risk. Then I'm going to talk briefly about the tactical process, meaning what worked for Solazyme, and in a Q&A you can ask me what didn't work as well, and then the transition to being a public company. So the first big questions, and let me step back first, and let me even explain why, because the why is actually a pretty big question. Why go public? You know? I would tell you, notwithstanding the front page of every major newspaper today, that Facebook made a wonderful decision to stay private for a long time. And if it had been a different kind of technology and a different kind of company, Solazyme probably would have waited longer to go public as well. But we are in an industry, in clean tech, that requires significant capital. It requires significant capital formation. In order for our cutting-edge technology to generate returns, we need steel in the ground. And in order to be able to leverage to get steel in the ground, we need to be able to assure our partners and our potential customers that we are going to be around for the long run. And going public is actually a very important part of that path to bringing a clean technology company to full commercial deployment. And I say full because we were already commercial in some of our markets before we went public, but we were really looking for the ability to be broadly commercial and to take the largest advantage of what I believe is completely groundbreaking technology. So once we made the decision, again, we had a few key areas of risk that we needed to address very clearly and we needed to articulate. And with respect to technology risk, one of the biggest and first questions is the technology disruptive? Why should I invest in this? And the second really big one in clean technologies and in our area of the world, which are biomaterials for biofuels and chemicals and nutritional products and even cosmetics, the next question is it proven at scale? It's great if you can do it in a lab. It's great if you can do it in 7-liter fermenters. For us, we make oil from industrial fermentation. But the question is it proven at scale? So the first question, is the technology disruptive? Well, I'll tell you about Solazyme's technology, which I believe is truly, truly disruptive. I'm going to go very quickly through this, and I'll say really if there's two important things you need to understand about Solazyme that make it disruptive technology. The first is that we've developed the very first platform to convert carbohydrates to oils. And what does that mean? Well, the world makes lots of different carbohydrate materials, everything from things we understand clearly, like sugar coming from sugar cane or sugar beet, corn-based dextrose, but also a wide variety of cellulosic materials that can be broken down into carbohydrates. We take those materials and our technology converts them into oils. And that is a truly disruptive capability, particularly when you consider that the vast majority of the biomass on the planet is majority carbohydrate based, whether it's cellulosic, whether it's starch, or whether it's sugar. And the second thing that's truly, truly disruptive about our technology is that we have the ability, using biotechnology, to tailor the composition of the oils. To tailor the composition of the oils literally in ways that Monsanto and Pioneer and other companies have been trying for decades and have made limited progress. We're able to do those kinds of things in a matter of months. So, two truly disruptive things: the ability to turn carbohydrates into oil at large scale and low cost using standard industrial fermentation equipment, and the ability using biotechnology to tailor those oils. And the next question, proven production at scale. And so I just picked a slide with some pictures. In the upper left corner, you have a picture of our Solazyme Peoria, Illinois facility. Below that, you have a picture of facility with our joint venture partner Roquette for nutrition in France. And on the right, you have a couple examples of scale up. You have the first U.S. commercial biofuels flight in history, and that was a 40% blend of Solajet fuel. That was a continental flight in November from Houston to Chicago. That was also the first commercial flight in the world on a microbial-based biofuel. And below that is a destroyer that in December sailed up the California coast on a 50% blend of Sola diesel. This is the beginning of scale. This demonstrates that this technology is not test tube technology. So production proven at scale. Then you have to take a hard look at the market risk, because you're going to get a lot of questions on it, and you have to have answered it for your own execution purposes, but you need to be able to articulate how you're going to manage. Do you have a sound strategy and a business model? Are the addressable markets sufficiently large to take the company public, and is there demonstrated commercial interest? So I'm going to try and go quickly through this slide, but this really has a lot to do with the strategy that we've employed over the last 9 years. What you're looking at in the blue line there is you're looking at a cost curve. And when we started Solazyme, which is a renewable oil company, we thought of ourselves very differently. We thought of ourselves as an algae company and as a biofuels company. We since shifted two things. One, we realized that a company that defines itself by its technology is not going to be able to commercialize its technology, one. And two, we realized that if we were making oils for biofuel, then we were making oils that could be used in a wide variety of applications, and we were a renewable oil company as opposed to a biofuel company. But notwithstanding that, our focus has always been to get down to the lowest cost possible to produce renewable oils. And at the bottom of this curve, it's fuel. It's what you burn. And as we developed our business strategy, we looked at a matrix of about 4 different things. We looked at market size. We looked at market risk. We looked at margin potential. And we looked at capital expenditure requirements. And we realized some interesting things. We realized that our most exciting market, the one that we had started the company for, and which we're still driving very hard at, fuels, had some very interesting features. It had by far the largest market size, and it had essentially no market risk. What does that mean, no market risk? It means if you can make the fuels in spec at the right cost, for our intents and purposes, you could sell as much as you could make. But that market also had some challenges. The lowest margins, you burn fuel, and the highest CapEx requirements, because in order to get to the right cost structure, you need to build big, fit-for-purpose facilities. And we realized that the other markets we were looking at, cosmetic, nutrition, and chemicals, had some interesting features. And we realized, for instance, that chemicals, that cosmetics, which sat kind of at the other end of the spectrum, was inverted from fuels on every single one of those things. Much smaller markets. Very high market risk. Have to convince somebody why they want to buy one cosmetic product versus the one right next to it on the shelf. However, very high margins. Very high margins. And low to no CapEx requirements. And why do I say low to no CapEx requirements? Well, for us, that was the case because our technology is based on standard industrial fermentation. And we were able to lease fermentation capacity, even paying a profit margin to the companies we were leasing capacity for, and make materials for cosmetics profitably. So 2 of our biggest challenges early on, which were we were still at the higher end of the cost curve, and we didn't have the capital to put large steel in the ground, were mitigated by the fact that we had very high margins and no capital requirement. So this basically informed our commercialization strategy. And I'm happy to say that we're now commercial in cosmetics. We have products in over 1,000 stores and every Sephora basically in the US and Europe and on QVC and elsewhere. We have raw materials in the nutrition market that are incorporated into products at Whole Foods and GNC and elsewhere. And we have very large collaborations in chemicals and fuels as we've driven down that cost curve. The other question I mentioned was large addressable markets. And renewable oils, I'm not going to spend a lot of time on this except to say renewable oils affords us literally the largest market opportunities that I can conceive of. The next piece of this, in terms of de-risking, is demonstrating commercial interest. And we were around for more than 8 years before we went public, and we had a lot of time to do those multi-year due diligence processes that some of these big companies require. We're partnered across the spectrum on the feedstock and joint development agreement side with companies like Bunge and Roquette, which are both very large starch companies. Bunge is also the largest, or second largest, depending on the year, originator of vegetable oils in the world. We're also partnered with other companies like UOP, Chevron, who we've been working with since late 2007. Dow, we've been working with for several years on dielectric fluids. Unilever, we've been working with under 4 separate agreements in soaps and personal care products, and now, more recently, in food products. It's been funding research at Solazyme for a number of years. And much more recently, United Airlines, but also for the last, say, 3 years, the U.S. Navy. So we really felt that it was incumbent before we even thought about approaching public markets to have demonstrated that there was clear commercial interest in our technologies. The next set of risks are around the track record of attracting investment partners and track record of creating value. And this is something you really need to think about and you need to be prepared to answer when you're going and sitting in front of both research analysts and potential buy-side and buyers of IPOs. And so for us, the way we were able to define this is by something very simple. It was by pointing out that since our inception in 2003, every single one of our private financing rounds was an up round. And if you look at that list of names, what you'll notice is we had the same investors in every round once they came in. So all we did was add more and more investors over time. But because we did what we said we would do over years, we were able to attract new investors onto a stable base of investors that were already there. Now, I'll also tell you there's a yin to that yang, right? Because we also, as you can guess, had anywhere from 8 to 2 years to educate our investors about why our technology matters and why it's important. And I can absolutely assure you that the attention span of public market investors is a very, very different thing. The execution risk is something that you really need to clearly define, how you've de-risked and are going to continue to de-risk, but also to be honest about what the execution risks are. So we spoke a lot about our track record of overcoming challenges. Some of you, there's a few investors in Solazyme in the room, and some of you may remember that very early on we were pursuing technology which didn't work. We were trying to produce fuels from algae in big ponds and photobioreactors. And notwithstanding the protestations of other people right now, I can tell you that I don't believe that that's a commercially relevant technology on a timeline that matters to me. That was a hard come to whomever for us. And we had to go back to our original investors and say, I know we told you that we were going to do this, but we just don't think it's going to work. We have alternative technology that's related, which is to leverage what we'd call indirect photosynthesis, or take plants that have already done the photosynthesis and feed them to algae. And remarkably, we had a patient and forward-thinking enough set of early investors that they let us do that. But we had a complete technology reset early on. And the next thing is the first visible test. It's execution of the IPO. So your potential investors are actually watching your IPO process as well. And they're watching the team that's on the road, and they want to know a lot about the team that you have back at the company. So I'm going to talk a little bit quickly about what worked for us. Well, we invested a lot of time in knowing the banks, the bankers, and the analysts. We spent time far in advance, and there's at least a few of the bankers that worked with us in the room right now. I would say it's critical to meet and get to know the sector bankers, the capital markets bankers, and one thing which I didn't figure out until a little later in the process is you really want to meet the syndicate bankers too. These are the people who are actually executing on the ground at the very end of your process, and it's actually really valuable to get to know them. But the single most important thing you can do is invest real time with the analysts in advance and understand how they think and read all of their research. Because ultimately, when you retain banks, one of the most important lasting things that comes of it is an analyst relationship. So I would say you go through this whole process, you select the banks wisely, make sure the analyst is a major part of that. And then the other thing is, the banks are very, very, very comfortable negotiating fees. They do it all the time, and most management teams don't have that requisite level of experience. So get help. We did, and it was incredibly useful. I would also say investing time in knowing potential IPO buyers was a critical thing for us. We took meetings, we tested our messaging, and we got a lot of feedback. But if there's really one thing I can say, if there are people in the room running companies thinking about taking their companies public, probably the most important thing I can say is the last, which is drive and control the process and the messaging. It's your IPO. You have a lot of people who are getting paid or will get paid to give you advice around one thing or another, but ultimately, the management team and the board should be driving the process. We treated our organizational meeting like a roadshow. Stuart, are you in here somewhere? We treated that meeting just like a roadshow, didn't we? I mean, we put a tremendous labor into that. We brought a draft of the S1 to our first meeting. And we took a first cut at the draft of the S1. But equally important in that process is grabbing hold of the messaging and making sure that it's simple enough and compelling. And in clean tech and in technology, that can be even more challenging. What we did was we tried to simplify down. We make oil. At its most basic level, we convert low-cost plant sugars to high-value renewable oils for fuel, for food, for life. This was the first slide in our IPO roadshow. Why? Well, most of the planet is producing a carbohydrate-based crop because the planet's much more efficient at producing carbohydrate-based crops than oil-based crops on an acre or hectare basis. And not only that, worldwide demand for either petroleum or natural oils continues to soar. And 3 sources of oil touch our lives every day in numerous ways, in many ways we don't think about. Very simple examples. You know, you don't realize that the mayonnaise that you might put on a sandwich has soybean oil in it a lot, unless you buy the healthier stuff with canola. You may not realize that the paint in your walls actually has linseed oil in it because it's a drying agent, and it makes the paint dry quickly so it doesn't streak. And on and on and on. Oils touch our lives every day in numerous ways. And what Solazyme's technology has developed is a new source of oil. It's not necessarily new oil because we can make duplicates of existing oils, but it's a new source of oil. And we've demonstrated that can go into many, many of these applications. And these first 4 slides were the first 4 slides in our IPO roadshow. And we had to spend a lot of time. For those of you that understand our company, you know that there's a lot of things that we're doing, and the technology is actually very deep technology. So we had to spend a lot of time figuring out how to distill it down into ways that are reasonably digestible in a short period of time. And it was up to us. It wasn't an outside firm that came up with this messaging. It wasn't our bankers that came up with this messaging. It wasn't our outside lawyers. It was our management team. And it was a lot of hours spent inside conference rooms thinking about who we were and how to explain what we did. Tactically, what worked for us was being bold, unique, and innovative. We included a partner testimonial video in the roadshow. I know I only have a couple minutes, but I think it's useful to actually show this video because we actually used an iPad on the roadshow. We didn't bring roadshow books with us. We brought an iPad because it allowed us to flip back and forth to slides that people wanted to talk about, and it actually allowed us to bring our partners and potential customers into the room with us, which is something you don't get the opportunity to do on a roadshow. And so we created a partner testimonial video in the roadshow, which I'm hoping that they can put up right now. Solazyme is the 21st century oil company that uses biotechnology to produce a new source of renewable tailored oils for our planet.
Solazyme has huge and positive implications for our national security, for our economic security, and for the environment.
Unilever, Chevron, Bunge, and other large industrial companies work with Solazyme because Solazyme produces solutions that enable their companies to improve their technologies.
We start with microalgae, which have evolved to be excellent at making oil. And what we've done is develop a capability to grow them not in ponds using sunlight, but in a far more cost-effective and controlled way.
To be able to grow an algae to the cell masses that they grow it, and those cell masses produce that quantity of oil per individual algae cell was just phenomenal.
Solazyme's process can produce the perfect oil for diesel fuel, different perfect oils for hydraulics, lubricants, and industrial fluids, other perfect oils for detergents and soaps, and countless more perfect oils for consumer, industrial, and specialty products.
Refining is our business. Pretty much every refinery in the world contains some form of UOP technology. Solazyme oil is one of the cleanest we have processed. It comes to us in the right carbon number range to be able to be efficiently converted into transportation fuels like diesel and jet fuel.
We're shipping rail cars of our fuel to the U.S. military, and you can walk into the supermarket and find products on the shelf that contain our oil.
Last year, we extended that testing to our MH-60 helicopters and a Riverine command ship. And in every case, the engines absolutely could not tell the difference.
We're very excited about the opportunity to work with Solazyme. We burn almost 5 billion liters of jet fuel on an annual basis, so we'd love to buy as much as we could.
Our supply agreement of Solazyme oil for 2013 is 20 million gallons, taking that up to 60 million gallons by 2015.
The joint venture between Rocket and Solazyme addresses directly the market need for large-scale food and food ingredients.
En el tema de producción de biocombustibles a partir de algas, Solazyme es una compañía que tiene desarrollos de última generación.
Solazyme's work, especially its microalgae ingredients, is very promising, and we are more than happy to launch a brand in exclusivity at CEPA.
Bunge is one of the largest vegetable oil producers in the world, and in the last 5 years entered sugar and bioenergy in Brazil. Solazyme's ability to transform those sugars into vegetable oils create this unique win-win proposition.
Thanks. If we could head back to that presentation. It was really critical for us to be able to bring those kinds of testimonials into the room, and we actually had much longer segments for many of those companies if some of the people we were meeting with wanted to really get a much richer view of what Dow had to say or what some of these companies had to say. We could actually play a significantly longer interview. We also included a booth display when we had our big city meetings. We brought with us on the road, we brought skincare products, we brought cookies, we brought vehicles that were fueled with our fuels, and we cited them outside the locations. We did a lot of things to animate the technology, because telling people you make renewable oil will generally draw some blank stares. But having somebody get into a vehicle running on it, or wash their hands with a bar of soap made from it, or eating a cookie made from it, starts to resonate with people. So that was a very, very critical part of our process. That's a picture of the booth, and that's an iPad application that we set up as well. I think the last thing I would say is, you know, once you've made the decision, you just got to enjoy the ride. All kinds of crazy stuff is going to happen along the way, and this was a very important day for Solazyme to go public, to bring in over $200 million to help us. But it's really important, especially important, and this is something that we started doing with our own company internally more than a year before we went public, was explaining to people that the public offering is only a financing event. It is not a liquidity event. It is part of the path to building a truly great and lasting company. Because when you have employees who think that the day after the IPO their job is going to be easier than the day before, that creates tremendous challenge. It isn't any easier the next day. And so what you really need to keep doing is you need to keep executing. You need to keep innovating. The one thing you need to do is you need to adopt an even thicker skin. That's something I've been working on. I'm still a work in progress. And continue to relentlessly execute against your plans. Since our IPO in late May, we, together with Bunge, selected the Moima Mill as a site for a 100,000 metric ton facility. We signed feedstock agreements that would cover about 90% of our 2015 oil production capacity. We selected the site for our Phase 2 5,000 metric ton facility with Roquette in Le Trem, France. We brought our Peoria, Illinois facility online and began running fermentation there. We fueled the first commercial biofuels flight in U.S. history and the first microbial biofuels flight, commercial flight in international history. We had the U.S. Navy do the largest single biofuels test in history, which was a test of the destroyer up the California coast. And we continue to expand our relationships by entering into a new JDA and supply agreement with Unilever. That was our 4th agreement with them. The point is, though, we just continued to execute, and that's what you need to do. So with that, I'd like to say thank you. And Ira, I don't know whether we're out of time or we're just about out then. Yeah, happy to take a question, too. No. The question was, do I wish we had waited to go public? And by the way, let me just point out very quickly, when Congress failed to get together on a debt ceiling, and then the downgrade happened and the markets got hit, future cash flow companies like Solazyme, our stocks saw a very, very substantial reduction. And so a lot of people have said to me, well, if you knew the markets would do that, our entire sector is probably down on average 40%. And people said to me, well, if you knew that was going to happen, would you still have gone public? And my answer is, we're building this company for the long term. And this money allows us to continue to do the things that we need to do to develop the technology. If we hadn't gone public, I'd be facing a private fundraising in a difficult environment. So my answer is no, I wouldn't have waited. It's good to see you, Charlie. So very quickly, by the way, Charlie was one of our early investors. That's Charlie Finney, and his question was, is it something the street isn't getting about your company, given how far the stock is down, or are they just short-term in terms of thought process? And yeah, actually, it's not, because if my CFO was here right now, he'd probably counsel me against answering this. So, but as a practical matter, I think that the pool of investors who understand bio-based products, fermentation-based bioproducts, whether it's enzymes or renewable oils, people who are really willing to go out and look at what I believe is a whole new class of products, it's a very, very shallow pool right now of investors who really understand. And you certainly had people getting into some IPOs that didn't really understand the technology, and then when they saw real volatility hit, without naming any names, we had a significant fund that came into our IPO and took a fairly significant position and had been working on Solazyme for years, really understood the technology. The portfolio manager had made some pretty bad bets in other areas, and the portfolio manager was fired, and the new portfolio manager came in with an edict that they wouldn't have anything in the portfolio that wasn't cash flow positive. And that's kind of one example. But Charlie, again, for me, this is an educational process. It'll take time. Do I have frustration? Sure. What we're doing, I think, is completely disruptive. We make triglyceride oils. After petroleum and water, we're talking about the next largest, liquid substance that's used. And one thing I'll say is it's used commercially in everything. And we have the first technology to produce highly tailored triglyceride oils across multiple markets. To me, what we're doing is absolutely, completely disruptive, and it will be recognized at some point. But right now, it's a question of us educating lots more investors and probably being patient to understand that it's still mainly, notwithstanding what you read again with Facebook and others, it's still mainly a risk-off market.